It is holding its smoothness on this 15-minute candle here, guys. And if it does do that and it creates a gap in price, you guys know what to do from there. We would look for some type of short-term lows to be rated for those that are obviously FOMOing in. We looked along that and then ride it up to the high, okay? I'm telling you right now, if we get that, there's not going to be any hesitation. There's not going to be any, oh, if this, if then that. We're just taking it immediately with no hesitation, making it count, okay? I'm just letting you guys know right now. And if it doesn't happen, then okay, I don't get my instant gratification and I have to wait for the next opportunity, okay? Okay, welcome back everybody. Today I'm going to be breaking down to you guys all the ins and outs of how I was able to buy the NASDAQ assertively like you see here, get paid, and basically just break down to you the model number 3 that was at hand right here, okay? So the first thing I'm going to do is I'm going to scale out to the higher time frames because no good system, no good, model 3 is being immediately from the 1-minute chart, right? It's always starting from out here, okay? I'm looking at the hourly time frame, right? And I'm identifying, okay, what type of market are we a part of? What's the overall higher time frame order flow? As you can see, clearly the higher time frame order flow is still bullish. There's nothing that's like suggesting bearishness. There's nothing that, no tops I would try to pick, right? It's still bullish. Every single time we drop down, it immediately rises back up, right? So every drop down is just setting up good longs. Okay, so when we go to the hourly time frame, I'm looking at this rise up here and I'm thinking, okay, how can I capitalize on this today? Very simple. I wait for a model 3 or 4 before reaching key old highs. So all I'm doing in these higher time frames is number 1, identifying overall order flow. If it's bullish, I'm going to prefer taking longs and being in sync with that overall order flow, right? Why? Because the trade's going to be much easier. I'm going to be on the right side of the market. I'm not going to take fake short setups. Right? And the second thing I'm doing is I'm identifying what I can target. It's very simple. Just looking for old highs that are obvious, like this right here. See this double top? See how clean and equal they are? All right, and notice the large wicks that are attached to them too. This is a very obvious opposing pool of liquidity in the form of old daily highs. Okay, so I have everything that I need here at this point to then scale down and look for a bullish Model 3. Why? Because I understand overall order flow in the higher time frame, and I understand an obvious draw on liquidity. So now I can scale down to that 15-minute time frame. All right, and immediately what you can see is the first thing I'm looking at is the opening price. What did we do? What was the narrative building up? Okay, and this is one of the most powerful components that let me know that I was still on the right side of things in terms of being bullish. This midnight opening price right here. If you look at the checklist, you want to see manipulation or damage below the midnight opening before taking the setup. It actually happened twice. Number 1, London Model 3 actually performed after we dumped below the midnight opening, right? B tier setup to the upside. Point being, we manipulated and did damage below the midnight opening price to clear out old lows, which you see right here, and also to get people thinking that it's time to short, right? Then it rises up. Now we're into the session that I trade. What do I want to see for the checklist once again? I want to see damage below the 930 or the midnight opening price before I look to engage in longs. As you can see, it did not return to the 930 opening price. However, it returned right down below the midnight opening price, and notice how this activated the Model 3, right? So you can check that off the checklist right here. The second thing I'm looking for is a 15 or hourly imbalance in price. We have 2 of them right here. How do I know which one's going to work? I don't know which one is going to work. All I know is that it's going to be one of these. And once the model performs out of one of these 2 gaps, then I'm going to take it. So we dive down into a key level, right? That's this old 15-minute gap. We manipulate below the opening price. Now we have to identify a change in the state of delivery. As you can see, these 2 15-minute candles, it's not like typically how we like to see it, where it's like really solid body. There's a bunch of wicks attached to it. So let's go ahead and jump down to the 5-minute, okay? It's going to be either the 5, 15, or hourly chart where you look for your clear change in the state of delivery. Now, this one is a little bit hidden here, guys, okay? You're going to notice that because of this consolidation here. It created this wild consolidating market, probably getting people's emotions riled up, and then it created the Model 3. So what happens is we don't have a clear change in state delivery off this leg, so I waited for it to tap into the key level again. There it did. Boom. And these are the only set of solid body candles out of this entire bunch right here. So I'm going to anchor that opening price. Okay. Again, we manipulated below the opening price here. We delivered a key level in the form of the imbalance. And now we pierce above the opening price. Okay. You're going to notice really quickly, guys, that this is a Model 3 and 4 hybrid. This doesn't always happen, but it's both models incorporated because all the rules that are, incorporated for Model 4 are absolutely here for the system, the 15-minute gap, et cetera, et cetera. And same with Model 3. Now we pretty much have everything from the higher time frame that we need, guys, right? Key level, overall bias. Now we're going to look at the timing element. All I was doing, guys, what did I tell you on stream? When I hop off for the AM session, I'm just only focusing around these hourly candle opening prices. So when we got to 12 o'clock, I was just looking at it for about 10 minutes, and then I realized, oh, wait a minute, we got something here. Let's go to your hourly time frame. Take a look at this opening price here. This is absolutely beautiful. Why is this beautiful? The previous hourly candle at 11, it delivered our key level here. Boom. Now what's left for 12 o'clock to do? It opens, manipulates below the opening, distributes higher. That's how you want to see a candle act, right, when we're talking about utilizing it for model number 3 or 4. Classic PO3 with the hourly candle after the previous one kind of gave it the alley-oop. Notice how we wicked down, by the way, as a bonus, into this large wick. The only large wick that we had, it was filled in right at the upper end of it. Boom, runs up. Okay, now we're on to our 1 minute chart, guys, all right? So again, we have everything backing us at this point. It's like, oh, what about this entire consolidation? Well, look what we did inside the consolidation. I didn't need any more lows tagged, right? Even though we did it right here. I don't need any more lows tagged. I don't care about this double bottom. I don't care about any of that. Why? Because look at the initial rally in the beginning of the session here today. It ran up. Higher low, higher low, higher low, higher low. Every single one of these lows were tagged, right? That's all I need. Because smart money, they're reaccumulating their long positions once they tag out key lows like this. This was the first low that formed after 930 ran up out of the opening range. This is going to be a really important low. Why? Because this is where majority of sell stops are going to be jammed below. So once we liquidate that, this is going to always usually, in this context I'm giving today, going to offer high quality buying opportunities. This specific setup here, though, it just took longer. That's all, right? It came down below the low, took it, but it stalled until it finally ran up in utilization of that next hourly candle. Oh, how did you know to wait for here? Again, I'm just looking around the hourly candle opening. So I'm not looking inside of a consolidation here in between 11 and 12. I'm waiting till 12, see what it has to offer. It just so happens right when 12 popped off, here she is. Right in sync with the 12 o'clock hourly candle, we had a light bulb expansion with multiple gaps, creating that change in the state of delivery. So here you have two gaps above the opening price of 12. You're going to enter right on this imbalance retrace or this right here, which I'm going to get to that in just a second. The correct stop loss placement here for the original entry, most of you already know it by now, just below this low right here. Okay? Just below this low right here. So for those of you that worry about RR, again, I didn't plan for this to be a 1 to 3R trade. This is just what the market supplied to me, right? The fact that we created this model here, we had a Model 3 target / Model 4 target right here. And this is where the multiple gaps created with structure. This determines the RR. So the correct stop placement had to be right here below this candle right here. Why? It covers both gaps plus these down candles. Okay, it has to cover 3 important levels, and that's what this stop loss placement is doing here. Notice there's basically no drawdown, right? Just a baby retracement, runs up straight to the target. Now, this is where things get interesting, guys, okay? Because you're going to see, obviously, how many times I pyramided. Majority of the pyramids here, I'll get to in a second, but realize what happened here. We delivered the gap, right? And literally all I waited for was a Model 2 continuation to prove itself. So we delivered the gap. I let it deliver the gap. What did it do? It shifted out of that above this opening price, like I was commentating real time. Once it did that, taps the opening price plus If you look really closely, there's a small gap there. That's exactly where I bought once. It ran into it again. I bought again. Boom. And then I started getting really positive momentum in my direction. I know that this trade is going to be good. I know it's going to hit the target at this point with this delivery. So what do? I hold my confidence and I add one more contract, one more. Each time it rises up. Oh, we had another shift above. Another up candle. What did I do? I added one more. More momentum in my favor. Above this down candle, boom, add one more, get covered out. Now, I'm going to pull my fib quick, guys, okay, and you're going to see from the Model 3/4 target high up here down to the low, you're going to find equilibrium, right, which is just a fancy word for midpoint. And look where that down candle's placed. Wow, look at that, man. That's your Model 2 down candle. That's why I utilize it so specifically like this, right, that equilibrium down candle. Very, very beautiful, right? The question is, oh, why were you so confident in pyramiding right here? Oh, the answer is actually going to be on your 2-minute time frame. Let me take the executions off so you can see. If you take a look, it actually offered a second high quality opportunity, right? If this wasn't enough for you here and you weren't confident, guess what? It literally offers another one right here. Creates one, multiple gaps. Does it retrace into that? Yep. Boom. As soon as I saw that, that's where I was adding, right? And then again, here's these up candles that I was talking about that shifted above. That's when I added more. This is me capitalizing on bullish order flow, guys. Typical basic order flow tells me that all down candles, right, should not be disregarded and they should be respected until we reach the high quality draw and liquidity. So I'm not pulling my fib out, guys, and I'm not saying, oh, I can't pyramid in a premium. Okay, I never subscribed to that idea. That's nonsense to me. Okay, if I'm confident in a target and I'm managing risk accordingly, I'm adding more as long as we don't hit the target yet. Now, if we're like 10 points within the target, okay, at that point it's a little bit foolish. All right, but this is me owning my confidence when the market offers another opportunity. Now, the other question might arise: oh, when you're adding more, you're putting more risk on the table, man. Nope, you're wrong. When I was adding more up here, right, I already had really good delivery. Really close to the Model 3 target. So I was already cutting my stop loss in half. So I'm already de-risked from the original positions. I'm just adding more. So it's really not adding that much more risk if you really think about it. Once we got this rally here, right when I added the last contract, I was able to go fully break even because we were about 40 handles in profit, right? And really all there was left for me to do was just simply let this thing ride out. And once again, it all goes back to the higher time frames, guys. The reason why I was so confident in all this stuff that I'm breaking down to you guys real time was because the higher time frame was backing me. I knew I was in sync with that thing. I knew I was on the right side, right? And I'm not trying to pick tops and fade, and that's all ego trading, guys. Stay in sync with the market. There's nothing wrong with it. This is a typical Model 4 continuation, right? For those that are new, very simple. Identify a high quality draw. Remember, was these old daily highs here. You want to see a really large rush in the direction of that high quality draw. Then you want to see multiple 15-minute gaps ideally or on the hourly time frame, and then you want to see that gap delivered. Okay, before the draw gets hit, we have that 15-minute gap delivered here. Along with the 15-minute gap delivered, what do you want to see? You want to see some type of lows being taken. That happened right here and below here. That's your Model 4 activation. And then everything that I just explained here, this is what you wait for your confirmation of Model 4, right? A time-based light bulb entry. That's all it is. No need to overcomplicate it. The more reps you gain with me, the more experience you gain, the more confident you're going to get, therefore the more money you're going to make. Hope you guys enjoyed this one. God bless, and I'll see you in the next one.